Thank you everyone for attending. And we're pleased to provide an update, principally based on the first quarter of this year, but also more broadly with an update for the company for our outlook for the remainder of the year. It's a slightly unusual way to present a quarterly for us as a company. For those who follow the company in detail, our formal financial year end is March 31st of each year. So that means that we won't have the final quarterly numbers and the full year out until probably sometime in July. That's something that's going to change going forward. By the end of this year, we'll move to a formal full year. So we wanted to present this update so that we could present some preliminary view of what those numbers are on our production and some cost guidance ranges, and allow us to present what that means for us as a company, and more importantly, to present what that does for us going forward as we plan to build the company. I note that on today's presentation that we'll be making forward-looking statements, myself and the team. You'll be able to find this presentation on the website. We'll also host the webinar on our website for anyone who wants to come back and read through in detail. As most of our shareholders know, what we've been trying to achieve at Heliostar is to build a mid-tier gold producer. Obviously, the last 12 months has been very transformational in that, and it's our great pleasure to be able to present a quarterly with our first full quarter of production as a company. We plan to grow significantly from where we are now, and hopefully by the end of this webinar, you've got an update on how we're going to achieve those steps of materially growing our production profile. Our aim is to be a 500,000 ounce a year producer by the end of the decade. So I'll start before we get into the quarterly and introduce the team at the highest level. Where we stand at the close of yesterday is between a 250 and 300 million Canadian market cap, $1.14 share price, 249 million shares outstanding, just over 300 million fully diluted. One of the things that I'm particularly proud that we've achieved over the last few months is a much stronger balance sheet. As a function of the production that we'll talk about, cash flow from the operations, and the financing that we undertook in the quarter. We ended the quarter with $27 million in cash, and we're starting to see some of the warrants trickle in. We also have a significant amount of in-the-money warrants that we expect to come in if we remain at these levels over the next 12 to 14 months. We're fortunate that we've got some very strong shareholders, led by our largest shareholder, Eric Sprott, Franklin Templeton, also over 10%, and then a number of institutions led by Adrian Day, who have been supportive as we've built this company. I think the company is on a lot stronger footing than we ever have been, and we can use that to ultimately bring Ana Paula online, as we'll talk to. Over the quarter, and it's a good chance for me to introduce Stephen and Mike, who are joining me on the call. We've continued to grow our management team to the point that I think we have all the key roles in place and the experience in place that will allow us to deliver on the promises that we've been making and that we'll make today. And so in the quarter, Vitalina Lysoon joined us as our CFO. Vitalina's got extensive experience in Mexico, having joined from Gatos Silver. We also added Stephen Soock and Connor Lillico after Easter. Stephen joins us as an analyst from Stifel, who's going to help us with our investor relations and with some development work that we're focused on as a company. And Connie joins us with an extensive career from First Majestic. She's already been involved in one nascent company. Hopefully she's bringing her expertise as we build Heliostar to be another of those. So I think the combination of management and board that we've put together, culminating with Stephen and Connie's hires, puts us in a really strong position to deliver over the next couple of years and continue to build Heliostar. So with that, I'll probably first introduce Stephen. Stephen, if you're happy to say a few words and introduce yourself, please.
Yeah, absolutely. Thanks, Charles. So joined very recently, as Charles said, previously as an analyst with Stifel, covering the junior precious metal space, gold and silver. So lots of exposure in Mexico and lots of experience evaluating growth companies and their ability to add value for shareholders as they execute on strong growth plans with good management teams and a good portfolio of assets. Now, if that sounds a lot like Heliostar, that's not by accident. That's a big part of the reason I joined, is that the company does check all the boxes in my mind for something that I want to be attached to the long term and continue to help build. So happy to be here. I guess I'm just closing out my first month, and with a mandate to try and expand the shareholder registry more to the institutional world, as well as continue to tell the story to a broader audience, and work on various development opportunities as they come up to try and take some of the stuff off Charles's plate.
Thank you. And our VP of Corp Dev, Mike Gingles, is here. He'll present part of the presentation and answer any questions you've got. When we move to our formal quarterlies, Vitalina and Greg will join as well. We wanted this to be more of an update of our plans, so hence the focus on development and growth of the assets. So if I return to the presentation, for those who aren't familiar with the company, our key assets are spread across Mexico. Our operating assets that we'll report on today are the Colorado and San Agustin and Durango. And then corporately, our priority development project is the Ana Paula Project in Guerrero. That's going to be the key focus over the coming years, and we intend to use the cash flow that we're generating from these assets to build that. We have a very significant resource base as a company to grow on. We're a very asset-rich company. We have 3.2 million ounces in the M&I category that we treat as current, and another 1 million inferred. We also separately have 2.9 million ounces in the historic category at Cerro de Gallo, and we're working this year to update that as a technical report. The company's backed by a significant resource base and a significant development pipeline, and the key is to use the cash flow from our existing operations to unlock that and expand our production profile. What that breaks down to, really simply, is maximizing cash flow from the Colorado and San Agustin and using that to build Ana Paula with little to no equity dilution. That's what we're targeting as a management team, and we can add some additional clarity on that throughout the presentation. What we've been able to do at the Colorado is restart production at the beginning of this year, return it to steady state mine life, and in 6 months it's gone from care and maintenance to restarted with a 6.5-year mine life ahead of it. It's been a pretty significant transformation from the asset, and we're working on further improving those economics with an updated technical report mid this year. At San Agustin, we're very profitably recovering gold from the leach pads, and we intend to restart operations in Q4 this year, and we'll present the progress we've made on that. And a lot of work going on to the feasibility study and a detailed drill program at Ana Paula that's going to lead to a construction decision that we plan for mid next year as a company. With that in mind, our guidance for this year is 30 to 40,000 ounces. We reiterate that guidance on the back of the quarter of gold production. We anticipate doing that at 1950 to 2100 gold price. We've tracked quite well in Q1, as Stephen will touch on relative to that. The higher costs are principally due to the restarts of operations. We think life of mine, these assets will support around 1800 ounce production, but as you restart, you have additional costs, and they're captured in this financial year. So if we delve into how that looked on the first quarter, Stephen, if I can hand over to you to present the first quarter of the year.
Thanks, Charles. So as Charles mentioned, these are Q1 preliminary results with full financials and our full year coming out later in the summer. We'd had a very strong Q1. I don't think there's any doubt about that. 9,000, almost 9,100 gold equivalent ounces produced. A little bit of lag in the sales, but that's really just around timing of when things get shipped out the door. So, that'll be plus or minus about that 1,000 ounce margin going forward, but it all comes out in the wash. That culminated in strong cash generation for us. We had about $15 million that we added to the balance sheet from operations, which is great for our first full quarter of operations from these assets. Also worth noting that we used a portion of that cash, actually that's net of extinguishing $5 million worth of debt that we used to purchase this portfolio in Mexico. So we are currently debt-free at the corporate and asset level. On the cost side, cost came in very strong as well. Part of that is due to the stronger production. Obviously, as you produce more ounces, you've got a larger denominator by which to divide a bunch of the overhead costs. So very strong cash costs to start the year, which you expect to come in and let's call it the $1,200 range, and AISC around that 1375 to 1475 range. This was let's call it a strong start to the year. Something that we do expect to weaken a little bit. I think we should be prepared for that through Q2 and Q3. Not to say there aren't still opportunities for us to outperform, continue to find things around the edges that continue to drive strong results. But just the nature of the mine plan we put together through the year, it will tail off a little bit and then likely pick up in Q4, which I'll touch on in a little bit more detail. All that to say, strong production in what ended up being a very strong gold price environment produced a very healthy AISC margin, 50% AISC margin. I challenge you to stack that up against a gross margin in any business, not just mining, and we'll be viewed favorably by that metric. Next slide, please. So a little bit more color as we go through kind of the assets here. This is a nice shot of our La Colorada mine, which, as Charles said, went from going into care and maintenance to a 6-year mine life shortly after we got our hands on it. Gold production of just over 4,100 ounces. Silver production, not insignificant at just over 18,000 ounces for 4,300 ounces GEO production. Throughput at around that 11,000 ton per day rate. That's on average. Some days are stronger, some days are weaker, but we managed to do that over the 90 days in the first quarter on average. The bar here is representative of how we're tracking against guidance for the asset and midpoint of guidance. La Colorada was, is a little slower to start. We did start stacking from the junkyard stockpile in January. Those ounces, there's a bit of a lag before you see the full effect of that coming through the leach pad, stacking on top, and then it's got to trickle through the whole pad before the recovery at the back end. So we do expect that to pick up somewhat in the next couple of months here. But it's very profitable material. It's 0.2 grams a ton doesn't sound like a lot, but it is already mined, blasted, and sitting right on surface. So all that's involved is a little bit of rehandling, crushing, stacking, and leaching. So this is definitely a strong cash generation center for the company. In addition to that, let's call it pseudo-primary mining activities, we also have a strong residual leaching, turning over portions of the pad and putting them under re-leach. What's nice about La Colorada is the gold mineralization, to get a little technical, is in fairly coarse particles. So if you can think about leaching it, you take the skin off each of those particles every time it goes under leach. If you get bigger particles, there's more skin to peel off it like an onion. So as we go through this re-leaching, we are getting strong results from those bigger gold particles continuing to produce out from the back end of the leach pad and into doré bars for us. Something else I think is important to highlight is no lost time incidents. Safety is paramount for us, something we start off, every daily report starts with the safety line, and every site conversation every day starts with a talk on safety. And it is a good leading indicator for how well assets are managed. If safety starts to slip, you can be sure that production metrics are going to slip as well. A strong safety record speaks to how much attention and care is put by the team day to day, day in, day out. Last but not least, the drill result continues to impress. We have an ongoing drill program at La Colorada with a few different focuses. Some of these results in the quarter show very strongly drilling some of the upper portions of the crust on pushback, converting areas that were modeled as waste into ore just through a lack of data points. Charles will touch on in more detail as we go through our path forward here, as well as adding high-grade ounces in some of these resource areas. And importantly, also high grade below the pit. 8 almost 9 meters at 25 grams per ton is a nice hit, but it's certainly not an anomaly here. We are seeing multiple hits of high grade over mineable widths, indicating that there's potential for an underground mine life extension at La Colorada. So expect more results to come out as that drill program continues throughout the year. Next slide, please. San Agustin mine, this is a mine that is residual leaching, but the team's found many opportunities to continue to really push this to outperform through the first quarter. Gold production of just over 4,400 ounces. Again, not insignificant silver. We are a gold company, but silver is a nice kicker to have right now. Just about 8,600 ounces for gold equivalent of 4,500 ounces in the quarter. There's three parts to our guidance here. There's what we produced in Q1, the guidance just from the residual leach, and then the restart of the corner area, what we expect to be able to produce in Q4 from that pushback. Again, Charles will go into more detail on that as we talk about our longer term plans for the assets. Again, at this site, no lost time incidents through the first quarter of the year, which is excellent. I said re-leaching, turning over and irrigating portions of the leach pad. There are also things that the team's getting creative with, looking at ramps, access ramps that are built with ore and haven't been robustly re-leached. That's producing good results for us. So these are, despite being on care and maintenance, that doesn't mean that we're just sitting back and doing nothing. There are opportunities here to continue to squeeze the pad, as it were. The other thing that significantly progressed through Q1 was permitting progress. We're got the change of soil use permit advanced through the permitting process. So continue to keep an eye on that for a continued growth area. We do need that to be able to mine the corner permit, but it's certainly progressing apace, again, as Charles will go into more detail. So those are the results for the quarter, and then I'll pass it back to I think Charles to present more of our path forward.
Thank you. Yeah, I think on every metric, from safety to improvements to our balance sheet and to our production profile, Q1 was very strong for us as a company. I think I thank the team in Mexico for the work that they've done. We are probably tracking quite well at the lower end of our cost range looking forward. So I think there's a number of things that we can be quite proud of. We ended the quarter with $5.5 million US in cash and grew that by over $21 million. So as well as retiring the debt. So it set us up very strongly. We're maintaining our guidance for the remainder of the year, but we're very happy with the start that we've made to deliver on that. What we would like to present now is move to what we're doing and some of the next steps, and how we maximize cash flow out of these assets, and then how we plan to distribute that, particularly on Ana Paula. So if I could, Mike, I'd like to hand over to you to present the work that we're doing initially at La Colorada and then at San Agustin.
Thanks, Charles. As Stephen said, we had a very successful quarter at La Colorada, principally re-leaching, but as we started up the junkyard deposit around January. That was a new deposit that was identified in the fourth quarter of last year, that was proved up, and now we're actually exploiting that material and beginning to see the success from that. Basically, no surprises to date. Things look steady. We produced a technical report on both the junkyard and El Creston, and the third deposit, La Veta Madre, at the start of the year. I think, as Charles referenced there, we have a new technical report update planned in the next 3 months. That will incorporate the results from the 12,500 drill program that was conducted between last October and into this year. We have drill programs planned for 2 more stockpiles similar to the junkyard. We've named them El Dorado and the truck stop. Those require drilling and proving up. We know generally the tonnage size of those, but we have to do the work. Those will not appear in the updated technical report, but we have some expectation that we can, if we're successful there, we'll be able to bring them into the production profile as well. I'll touch on the underground. Charles will touch on the underground a little bit later, but we have extensive programs planned regionally as well to introduce there. And perhaps, Charles, we can go to the next slide, or the next slide. This will explain a little bit where we have the areas of interest and where we are working now on the sequencing of those. The junkyard, as I said, was brought on in January there, with reserves as 22,000 ounces of gold. That's expected to run through the year. We'll have some further leaching from the material that was put onto the pads early into next year. We then have the 2 assets that I referenced there, the 2 additional stockpiles, which are El Dorado And we have Veta Madre, which is currently under a permit application for the CUS. We're hoping to get that through this year. That has another 43,000 ounces of reserves. So between the junkyard, the potential to mine El Dorado, and the potential to mine Veta Madre that we have subject to receiving the permit, we have pretty much set ourselves up for maybe 2-3 years of production out of La Colorada. As we referenced earlier, Creston is a major deposit, a major cutback with 312,000 ounces of gold. We have the drilling, which we're incorporating those results into the new technical report. Originally, we thought we would be moving straight from the junkyard into Creston. I think El Dorado and Veta Madre give us some different options in there, and that's really some of the work that will be done in the next 3 to 6 months. We'll be working on the sequencing of those and seeing how we can play with those and best incorporate them. Charles referenced there that a big driver here is to make sure we maximize the cash flow for the company. We have great hopes for Ana Paula. We really hope we can move forward with that successfully in the next few months and into next year as we move towards an investment decision. And so these assets are potential cash flow drivers so that we're able to internally build the cash mountain that we need to move that project forward as well. So it's looking good at La Colorada. As I said, we took this at a mining care and maintenance just 7-8 months ago. The diligent work from the team there. I think Charles has referenced previously that we bought some assets that we could see a compelling future for, but at the same time we inherited 2 strong mining teams there, and I think we've seen them excel the last few months as well. They've been able to identify new opportunities, really move forward. They've got the mines under control operationally. As Stephen said, no lost time accidents, and so we're pretty pleased with where that's going. And I think we've got a very motivated team there that's going to bring all of these deposits forward and hopefully build a good platform for the rest of the growth that we hope to get to.
Yeah,
Charles,
I
say
agree.
a few words about the underground.
Yeah, and I love this slide because of what it demonstrates. So as you touched on, clearly there's 2 things that have materially changed since we bought these assets. One is we're in a completely different gold price environment to we were when we initially agreed mid last year. Secondarily, the change in the ability to get permits in Mexico is certainly a breath of fresh air from my personal perspective. So that's allowed us to then focus on what generates the maximum cash flow for the least amount of capital, separately from what you're able to do under the permits that you have in place. So the technical report will pivot to Veta Madre first and Creston second, which lowers the upfront capital in our expectation. Secondly, and we'll talk to it later, in terms of maximizing cash flow, to be able to go from the junkyard to El Dorado, once we drill that off, to Veta Madre, we think those 3 can maximize the cash flow over the next couple of years and provide a significant amount of free cash flow out of the asset for us as a business that we can deploy to further grow and build from there. So to me, it's been a very positive surprise. We didn't know that we could do it this way, but the ability to be able to advance La Colorada with very little to no capex ultimately hinges on the drilling at El Dorado, but assuming similar grades to junkyard, which is a feasible step to take prior to drilling, we're well set up to sort of tic-tac-toe and continue to expand La Colorada with much more reduced capital needs than we thought when we first bought the asset. If we look a bit closer at Creston, which is the bigger prize at La Colorada to date, the drill program, we've been putting results out throughout the quarter. We've got more results to come. We'd committed to a 12,500 meter program. We've expanded that to materially over 15,000 meters. I think it'll finish up just over 16,000 meters. And that's going to drive the resource in the updated technical report in the middle of the year. We've had some success along strike in the shallow areas that were considered to be waste, that we think now can be ore. Drill results in the range of sort of 5 to 50 meters of 0.3 to 1 gram plus oxide gold. And then as Stephen touched on, getting some really attractive vein hits that we think speak to the underground potential, particularly at Creston and Grand Central, where we're going to, excuse me, my son has come in. is particularly at Grand Central and Creston, where we think that there's an underground mine future above and beyond the mine life of the open pits. So we'll focus on delivering the technical report over the next couple of months. We think that's got the potential to demonstrate more attractive economics than we put out in the study in January. And then in the back half of the year, look to focus on the underground and exploration opportunities, which we see some clear targets at La Colorada for. It's going to be quite exciting to be able to pivot and look at some of the upside for really the first time in a number of years at La Colorada. Mike, to you at San Agustin.
Again, successes in the early part of the year. At this stage, San Agustin is re-leaching. The mine's been successful to bring some new techniques to the leach piles, looked at some areas that were perhaps under leached in the past, and they've had some successes there to build up the production this year. So a great performance there. Looking forward, we're pending information on the approval of the permit, the land use permit for the corner, as Stephen talked about. Preparation work is made in anticipation of that at the moment, so we hope we have some success with that application sooner than later. With that, around the existing pit area, there's potential. The teams are looking at that. There's some drilling planned to look at the potential there, and so we can add ounces to the existing production profile. So again, again, pending approval of the course, we hope to take San Agustin through to the end of next year. There'll be, as I said, a few months of planning, very few months of planning, and hopefully within about 3-4 months of the approval, we'll be able to bring the production on, hopefully later this year, and through next year, we'll have production from there. As that goes on, we'll look at the future for San Agustin. There's several drilling targets, some drilling ideas, some other corporate ideas that are out, and we'll see what we can do with there. But it'll give us a production for 2 more years, and it'll give us the potential to build a stronger platform for that property beyond that.
Yeah, I think that's right. So I was in Durango at the end of last week. We're very comfortable. We're at the final steps of the permitting process. We expect to have that by the middle of the year. That's progressing quite nicely. Site visits were completed on track. We're at the very back end of that process. Once we get that, that's what we'll do, as Mike touched on, which is what we've done at La Colorada. Then we'll start to deploy some capital, and we'll look to expand the oxide resources to increase that mine life. In particular, we think the corner area could potentially grow to the southwest, so that'll be an immediate focus. We did some metallurgical work. There's quite significant sulfide potential underneath the resource. The first pass metallurgical work has left more questions than answers for the first pass, but it is something that we will focus on in the second half of the year once we've maximised the oxide resource footprint. Our aim is to maximise our cash flow from San Agustin, to extend the mine life as much as we can, and to use that cash flow to contribute to Ana Paula. Ana Paula, we believe San Agustin is going to be a very, very strong contributor to our cash flow next year as a company. And that's, I think, well summarised on this slide in terms of the cash flow that we believe that we can generate over the next 2.5 years and how we want to deploy that. I think we can generate between $80 and $200 million in free cash flow over the next 2.5 years from San Agustin and Ana Paula. That's a pretty significant amount of money, and that's the capital that we plan to use for the non-project financing portion of Ana Paula. And so we've attempted to show that. We're a bit restricted in terms of needing technical reports. For example, if you compare the junkyard in the first column, the recovered just under 15,000 ounces of gold forecast from the technical report. It doesn't include some inferred material that's being mined. It has materially higher cost than we've been able to achieve in our budget. If you track our budget, we expect the junkyard to produce between $10 and $15 million of cash flow at $2,600 gold. So it's proving to be much more attractive than the technical report. We're just a bit limited in how we can document that. We haven't yet drilled El Dorado. We expect to have very little to no capex, maybe a small expansion of the leach pad for a few $1 million. It's not beyond the realms to estimate the same or potentially even slightly higher grade, given that it was deposited at a slightly lower gold environment than the junkyard. So we think when we drill off El Dorado, which we're going to start doing in the next couple of weeks, we'll be able to provide certainty by the middle of the year. We think the cash flow from those two we can use to fund the cutback of Veta Madre. Veta Madre is going to grow in our estimation when we update the technical report this year. We're in a higher gold price environment, meaning we can capture more recoverable ounces. And so we think the three of those at La Colorada can generate a very, very strong cash flow for us. And then at San Agustin, it shows attractive economics at $2,600 or $3,000 gold, whichever one you want to show. So if we take what we think is possible out of the stockpiles, we add that to each of these projects and the residual leaching from the pads, I'll reiterate that we believe that we can generate between $80 and $200 million in cash flow, depending on more or less conservative ounces out of Dorado and more or less conservative on $2,600 or $3,000 gold. And our plan as a company is to use that capital to not need any significant or potentially any equity to build Ana Paula. If we can build Ana Paula, that's a step change for us in terms of production profile. It's a step change for us in terms of our cost basis in a reduction of our AISC. It means we're a much more valuable company. And if we deliver that with no to very little share dilution, it obviously sets us up for a very strong share performance over the coming 2 years. And so this then moves to our production profile of what we expect to produce over the coming years. There'll be slight adjustments and tweaks to this as we update the technical report at La Colorada. We're going to bring Veta Madre ahead of Crest on. But essentially, we're on track to increase next year. We should be in that 50 to 100,000 ounce a year range if you look at the dark blue from La Colorada and the light green from San Agustin. We think, however, that there's room to expand upon this. If we're successful with our drilling at the El Dorado stockpile, which we're highly confident about, we think we can materially improve our production in 2026. By bringing Veta Madre forward, by expanding the mine life at San Agustin, if we're successful at that, we think we can grow 2027. And then our true step change as a company comes at the beginning of 2028 when Ana Paula comes online. We think it's possible that we could be in the 150 to 200,000 ounce production range, noting that that is a forward-looking statement until we put the studies out at Ana Paula. And we think we can materially lower our costs. I don't think it's beyond the realm that Ana Paula produces with a sub $1,000 AISC. So we think that our true transformation comes in 2028. And I think we're on that nice path where we anticipate our production profile increasing, our cost profile decreasing. If you look at our peer group, if you're producing 150 to 200,000 ounces at sub 1,500 AISC, there's some pretty valuable companies out there that would suggest a material re-rate for us if we're successful at delivering it. And our unique proposition, or a unique business proposition, in my opinion, is the ability to do it with very little to no further equity dilution. And so then that brings a lot of attention to Ana Paula. Ana Paula we've always considered to be our flagship. We think it's the highest quality project that we have, and we're doing considerable amount of work to bring that forward. For a quick background for those who aren't super familiar with the asset, we bought it for what ended up being $10 million in 2023 after we cancelled the back-end payments last year. It was sold for over $100 million. It's had over $100 million invested in it. We own all the surface rights. We have camp, facilities, power, the decline that you can see here. There's probably $50 to $100 million worth of CapEx already spent on the project that we won't have to pay. What the deposit was is essentially this big sea of low grade with this fairly spectacular high grade core and the high grade panel in the center. And so we changed the approach from previous owners to focus on the high grade panel, a zone that's 280 meters long, 100 meters tall and 60 meters wide. The measured and indicated category, just over 700,000 ounces at 6.6 grams. The inferred 450,000 ounces at just over 4 grams. There's not too many 60 meter wide, 5 gram ore bodies out there in the world. It's shallow. It has good ground conditions. It's got a high-grade zone that'll come early in the mine life. It's got a number of attractive features that we think can lead to pretty significant margin for a deposit. Today, if you look at that high-grade zone, that rock's probably worth between $800 and $900 a tonne. And mining costs in this part of the world are probably going to be around $100, $115 a tonne mining and processing costs. So you're looking at a deposit that has the potential to contribute a significant amount of free cash flow, particularly early in its mine life. And we look forward to completing the FS to formally present that. What we're doing at the moment is completing the trade-off study. We know that at least 60% of the high-grade panel has good conventional recoveries, about 80% conventional recoveries. We're also looking into BIOX to handle some of the refractory material. We think that combined will give us the best financial outcome, particularly at these gold prices. The lower that we can drop the cutoff grade, there's a lot of ounces that we can bring into this mine plan. And we think it's going to give us the most flexibility to produce with a conventional pathway and an ability to handle the refractory material. I think really unlocking the financial outcome for Ana Paula. It's not something we originally planned when we bought it. We've made considerable technical progress, and this gold price opens up a lot of opportunities for us as a company to maximize that cash flow. What that'll do is then set the cutoff grade. That sets the mine plan for us in June. That allows us to then design the modified tailings facility. We plan to move from the permitted conventional tailings facility to a dry stack tailings facility. We'll submit the modified permit plan to amend it to go from open pit to underground later in Q3. We will begin the discussions with potential financing partners in earnest in Q4 so that we can target completing the feasibility study with the permit modification, with the financing in hand to make that construction decision mid-next year. That will allow us to achieve commercial production at the beginning of 2028 on the timelines that we're working to. The reason that we can move so quickly is the advanced nature of the project, given the capital that's been spent there before. We would also like, and we're reviewing scenarios where we can accelerate that decline. For me personally, if we can get the restart at San Agustin, I think that'd be a wonderful catalyst for us to restart the decline and complete the decline into the ore body at Ana Paula. One of the potential knocks that might come for us on the feasibility study is it'll initially show a shorter mine life because we haven't converted enough of those inferred resources. As capital was tighter for us and we were building the business, we prioritized on the maximum impact of the drill programs that we had, but we weren't able to do big enough programs to convert those 450,000 inferred ounces to M&I. We're confident that we're going to get a very high conversion rate. It's just a matter of doing that infill drilling. And so that stronger balance sheet on the back of the cash generation from the assets and the 19.5 million Canadian financing has allowed us to finally be more aggressive and do what we've always wanted to do at Ana Paula. So we're going to drill a 15,000 meter drill program. That's going to principally convert the majority of those inferred resources across. We think it has the potential to expand the footprint of the high-grade panel, the parallel panel, and some of these interesting hits in the recent drill results early this year. Some satellite hits of 16 meters at 16 grams in hole 314, 24 meters at 5 grams in 319. We think there's some expansion to the mineralization that we can put in there. And then lastly, it allows us to start doing the first real exploration at Ana Paula, which we've always wanted to do. We're going to test some of the ideas that there's more of these parallel east-west zones to the north. So some of the over 15,000 meters of drilling will go to that. We're going to do on the eastern part of the property, systematic soils, prospecting, mapping. We're doing geophysics over the deposit. We think that we can work up a whole series of growth targets for the first time since the discovery of Ana Paula. So we've got a very large land package. That land package is in a very prospective part of the world. As you can see when you stand on Ana Paula and look to the south, we've really never had the bandwidth to be able to look at our over 60,000 hectare land package And now, given a stronger financial stability, we can start to look at Ana Paula as a larger district. Look for within the resource footprint, at depth when we get the decline down, and at resource, and see, can Ana Paula be as big as its neighbours? It's certainly got a lot of upside, and I'm excited that we finally have the capital to start to unlock it as a project. So there's a lot of work going on at Ana Paula. We'll start to have systematic drill results, and coming from late June, early July onwards, we look to convert a lot of that inferred, which will allow us to extend that mine life beyond what it will show in the feasibility study, and see what is the true size and what is the true grade of Ana Paula. It's open at depth. It's open in that big sea of low grade with lots of high grade targets. Who knows how big it could be? We look forward to finally having the balance sheet that allows us to work that out over the next few months. In the background, we've got two large development projects, Cerro de Gallo and San Antonio. We've really been focused on Q1 in bedding down the assets, maximizing performance, working out what's the optimal way to generate cash from the production assets. In the second half of the year, now that becomes more steady state, you can see a focus on growth, the growth at La Colorada, the growth of the oxides at San Agustin, growth at Ana Paula. We're also going to start doing the work to bring Cerro de Gallo forward as an option for us after Ana Paula. We plan to complete a technical report on it in Q3. We're looking at the options to submit the permit, noting that we have a number of years to get that. So in our view, do the work on Cerro de Gallo with a view of that being the next growth option after Ana Paula, once we've built and paid back the capital of Ana Paula later in the year, later in this decade. And so it's quite incredible when you look at the organic pipeline that we have. You know, I don't think it's that hard for us to get to 300,000 ounces of annual production within our organic portfolio, which takes us a long way to our target of that 500,000 ounces by the end of the decade. So I've left our catalyst slide. I think it's, you know, one of the things that I'm very proud of the team, and I thank them for delivering, is that we've delivered the promises that we've made to the market over the last couple of years. We've steadily ticked off the milestones that we've laid out, and I think we've seen that as a positive reflection in our share price. We want to be a company that you can trust the promises that we make, and we pride ourselves on delivering on the promises that we make. And I think looking forward, there's kind of 3 levels of catalysts for us as a company. At the base, there's that ongoing production. At this price environment, we're demonstrating very attractive economics and very significant margins on the assets. We'll continue to put out those quarterly updates and look, as Stephen touched on, to outperform our budget over the remainder of the year. Then in the big picture, we have the big chunky steps as we show, you know, significant increases to our net asset value. The first of those will come in late June, early July with the technical report from La Colorada. Then at the end of Q3, we'll have a technical report on Cerro de Gallo and the feasibility study coming mid next year at Ana Paula. Each one of those, I think, are big steps for us along the way. Then we have more of that growth narrative feeding on top of that. It's the permits to expand San Agustin. It's the drill results coming from La Colorada. It's finally being able to do a significant drill program at Ana Paula for the first time, and then starting to do growth drilling at all of those assets. So I think we're in a pretty strong position as a company where we're generating free cash flow. We're deploying that on attractive growth assets. We see significant upside on all of those assets. We think that's going to lead to production increases year on year. We think that's going to decrease costs, and we can continue year in, year out to demonstrate an ability to grow our net asset value. And if we do that prudently, we believe that'll lead to a significant growth to our share price. So we think they're a pretty sweet spot to be a producer with the growth profile we have. We think we've delivered strongly in Q1. And with that in mind, happy to turn over and take any questions. Please feel free to write in the Q&A box any questions, and the 3 of us are happy to field and answer those questions now. Stephen, I'll hand over to you for the first of those while I read something.
Sure, thanks, Charles. So maybe address something you touched on kind of right at the end there. Someone asked, the stock's more than doubled year to date for this versus the GDXJ up 40%. I like the story, but I'm concerned I've missed the boat. Can you address valuation? Certainly, as Charles said, I think we're a NAV growth story. There's still certainly a bunch of those longer term development projects that have real potential that we just frankly haven't gotten around to in terms of team bandwidth yet. So expect those to start to add to our underlying valuation. We could also expect a bit of a multiple re-rate as we continue to grow in production size. This is a dynamic you see across the industry, that as you produce more ounces, you get ascribed a higher multiple in the market, partially through just meaningful scale and partially through diversification. I think that's another avenue we expect to drive value. And then, de-risking. Ana Paula, we'll have a feasibility study out mid next year, which will really highlight the what we think will be very strong economics that I don't think is truly fully appreciated yet in the market. So, look for our work to de-risk or lower the discount rate applied to that very, very valuable asset kind of within our NAV profile. Hope that answers the bulk of that question.
Yeah, Mike, I think a question that you can answer. There's a couple of questions along the theme of what were the drivers for the higher gold equivalent ounces and why were the costs so low in Q1 relative to our guidance?
Okay. I think a couple of features in there. I think we all reference the improved performance on the re-leaching. Efforts were made on both mines to revisit the leach piles to extract as much value as possible out there. That meant changing conditions for the actions of the cyanide. Lime was added in certain conditions. Other areas were looked at that had been leached, but were perhaps not fully leached. And so a combination of those all added to the production through the period. On the other side of it, the costs are under control and efforts were made to do that. And so you get a combined impact there on the results, which obviously drive the unit cost down as well.
Yeah, I think we've had a pretty good handle on the production numbers. Possibly, if we progress at this rate, in hindsight, you might argue that we were being a bit too conservative on our guidance range. I hope that becomes the case at the end of the year. When you take over production, I think it's prudent to be conservative. Now, as we get to understand the rhythm of the assets a bit better, we've deployed that restart capital. I'd hope that we are a bit conservative on that guidance range. That remains to be seen over the year, but we're certainly tracking strongly now. We chose not to take any risks, particularly around our cash guidance range for 2025. And I think that feeds into another question here around some of the higher costs for guidance. When you restart operations, you capture a lot of costs, either in the example of La Colorada, where you're spending the money in crushing and stacking the material, but you're not seeing the gold come out, or at San Agustin, we'll have a number of months of mine production. There's some CapEx up front for that. So you capture those. So steady state, as I said, I think we've got assets that will produce around an 1800 AISC. We're reflecting some of those higher costs next year. That'll balance out with representatively lower costs the following year, but you capture them in any period. So the higher cost in Q4, particularly for San Agustin, to answer the question, is specifically the restart CapEx. It's not representative of the life of mine. It just captures all the costs with very little amount of gold production coming from those costs in Q4. We'll get the flip side of that with a strong benefit the following year on the cost basis for San Agustin.
I think also just to clarify on that question, those are two separate pieces for San Agustin. The restart is not a subset of the San Agustin guidance, as it were. There's the San Agustin re-leaching program, and then a separate portion for Q4 for the corner permit pushback, with our consolidated guidance being a weighted average of all three of those portions: La Colorada, San Agustin re-leaching, and then the San Agustin restart. So it's not a subset. So just to kind of clarify the math there.
A question on CapEx required for restarting Veta Madre. So we've presented that there's around 26 million in the previous technical report. I'd expect that number to go up because I think we're going to capture more gold in an increase in the gold price. So I wouldn't be surprised if it goes up to the $40-45 million range. In guidance in the tech report, we support that We support that with the 26 million on the previous tech report, noting that I would suggest that that number will be slightly higher when we update in June this year.
And I think it's good, Charles, to add on to that. That is pre-stripping costs. So that this is mining costs as opposed to, you know, CapEx for equipment or materials. It's a pre-strip, and it leads us into the next part of the deposit.
Yeah, I think it's a genuine, to reiterate the point, even we didn't expect when we bought La Colorada that you could potentially go from the junkyard to Dorado to Veta Madre to Creston. A combination of permit constraints that we didn't know whether we'd be able to get, and not knowing the resources were there in the stockpiles and the gold price. La Colorada, as I said, has come a long way very quickly. It's very positive the way we can jump from one leaf pad to the other. I'm butchering a metaphor there, but I think we can really surprised ourselves. We initially thought we might need a notch more CapEx to restart La Colorada, and we've generated a very, very low capital intensive pathway for the asset. Some through the smart work of the team, also acknowledging the gold price has certainly helped our cause there. There's a number of questions here around M&A. As I touched on, I think we can get around that 300,000 ounce a year production number, with very little to no equity dilution, with the assets that we have. Our goal is to be bigger than by the end of the decade. We certainly get a lot of inbounds on M&A. We've looked at the odd thing. It hasn't been a strong priority for us as a company. We're in a unique position that a development asset would have to be better than Ana Paula, or very cheap, for us to look at that. Production-wise, you know, I think it is a market where you're starting to see M&A. And I think in the right scenarios, it is something that we would consider. From our perspective, though, it's only if we want to do it. We're not forced to do it. So we've got a strong hand for it. And I think most importantly, it's going to be project driven. You know, we're not a company that is likely to have a banker knock on the door and I say, this sounds like a great idea and it'll add to your NAV multiple. I think we've seen the way we've built the company is we've gone to parts of the world or assets that the market hasn't attributed valuable to. And we've recognized value and unlocked that. So whatever assets we would look at if we go and do M&A, I think we're likely to try and find an asset that the market has misascribed value to, sticking to our technical principles. We're certainly a very unpopular company while we were putting this project portfolio together. And I think it's seen to be a prudent decision. Certainly the tailwinds of a changing permitting environment in Mexico and gold prices had a huge part of that. But we sort of chose to accept some of those risks, knowing that these assets had upside if we deployed the capital. So look for us if we go and do M&A. It'll certainly later in the decade be something that we would look to do. We might opportunistically do it beforehand in a very special set of circumstances.
And actually, that leads into answering another question here, Charles. What's the remaining, I believe that's supposed to be life at La Colorada and other mines like San Agustin, and what's the potential upside? Part of that is we do see upside, especially at La Colorada, as Charles went through, both a long strike and then potential for underground, maybe later on down the pipeline. San Agustin, you know, there is potential there to expand the oxide resource somewhat. We're probably talking in the you know, quarters rather than years of additional oxide production realistically, but there is also that large sulfide ore body, large sulfide deposit, excuse me, sitting underneath that does require a little bit more work before can fully evaluate that. But part of that growth profile is definitely organic as well.
There's a question here on what permits are required to achieve our guidance this year, and can we get to 70,000 ounces next year? So I think the first part, the permit that we need is the expansion at San Agustin. We are projecting that we will have that in the middle of the year to allow that production to come on in Q4. That's what we need for production this year. To get to 70,000 ounces next year, that permit being in place, and then having the El Dorado stockpile come back favorably would be the simplest way. We've got a number of choices at La Colorada, but to maximize cash flow, we would like to continue pivot from junkyard to the El Dorado stockpile. That's what could possibly take us to that range. We'll obviously put that guidance out late this year, early next year. I think that's a good target for us. I think we can get there. We're doing the work right now. We should know by the middle of the year what El Dorado looks like and be able to present that. So we'll have a technical report showing the open pit expansions, and then we'll be able to show the cash flow that we can generate from the stockpiles ahead of that. Yeah, as I said, it's amazing how well it's come together for La Colorada.
There's some questions here on Ana Paula. Maybe you're best to address these. When is it likely to get the Ana Paula permit? So if you can kind of clarify the status of the permitting, and then question around current resources, mine life permitting, and the drill program. So you can kind of address those two in one.
Yeah, so as we touched on, locking down the flow sheet sets the material that goes into the tailings facility. That'll finalize the tailings facility design. Once we have that, we have all the material we need to submit the modification of the permit at Ana Paula. So our plan is in late Q3 to submit that. I would expect around a 9-month timeline for us to receive that permit back. Having said that, we would possibly advance the decline ahead of that, which we have permitted to do. So our intention is to have the permit modification, the FS study, and the financing all lined up for the middle of next year. In terms of drilling, we've got the 15,000 meter drill program. We expect to have the first results. I think we'll see them in around late June, maybe early July, and pretty consistent drill result news flow. It's always fun to put out results from Ana Paula, given how special the ore body is. It'll be nice to finally be able to just consistently put out those results over the remainder of the year.
As a lead into another question here, you touched on a more favorable permitting environment in Mexico. Can you elaborate on what makes you say that a little bit, please?
Yeah, so I can talk to that firsthand. We've been down regularly. I've been in meetings. Our team's been in meetings. Since the change in government, you're seeing when you sit down for a meeting with SEMARNAT, the acronym for the Permitting Authority in Mexico, a lot more knowledge, a lot more detail in terms of their understanding than under the AMLO regime, where things were effectively frozen. You see progress. There's a set timeline of which different steps are taken. You submit a document that's reviewed. There's a request for information. You submit the updated information. That's reviewed. You lead to site visits, and then different permit requires go down different pathways. We're seeing all those things happen. We had the site visit, which is one of the very last steps at San Agustin recently. We were sitting, as I said, in Durango last week, having some meetings. The system is working. We'd all love to see more permits more quickly. It's a return to still a government process, but I think from my perspective, Heliostar shareholders should take comfort that the process is working, and we expect to see the first fruits of that in the middle of this year.
There's the last few minutes we have here. Quickly, kind of coming full circle. Any plans for UNGA?
So we're in discussions right now. We'll probably plan to do a small program at UNGA this year. I'm heading up to UNGA for the first time this year in early June. It's a project that we see considerable potential. Look forward to a small update on that, probably in early June. It will see a small amount of exploration this year, and then we can make some decisions on the back of that program. So look forward to providing an update there in Q2, let's say. I think we've covered the bulk of the questions, although I think we've covered most of the key themes. If anyone would like a replay of this, please come to our website. We'll host it as soon as we have it up on the website later today. If you've got any questions, please reach out to us as a company via the website. I'm very happy to answer any follow-up questions. I'm quite proud of what the team's delivered at the beginning of this year. Look forward to turning that into a company that's worth a lot more over the remainder of the year. Thank you very much for your time, your attention, and your support and interest in Heliostar.